Conference for inviting me to give a speech on the economic outlook for ports, a very challenging topic. I think there is good news and bad news, and it all depends on which starting position you take. If you take 2008 as a basis, then I will tell you a lot of bad news. If you take 2009 as a starting position, then there's only good news. So we'll go through some things related to the economic situation in European ports. First, looking at the traffic evolution, an indicator that is often used by all of you. And then I will also tell a little bit more about what's happening in the markets, and particularly competition between the markets. So, European port traffic. Key question, are we already back at pre-crisis levels? Are we back at levels of 2008? The answer, not really. This is an evolution of the GDP growth in the EU 27 and the growth, year-on-year growth in the total port throughput in the whole European port system. And as you can see, and that's not a surprise, 2009 was quite a disaster for European ports. We got very strong recovery in 2010, but since 2011, things are not going very smoothly anymore. So we have a modest decline in the volumes. And also for the first quarter of 2013, there are no signs that there is any recovery yet. What's also clear on this picture is that there is an interesting relationship between GDP and throughput in ports. And so ports typically overreact to swings in economic activity. And when things are going in the wrong way, then ports overreact in a negative sense. When things are improving, then ports react in a positive sense. And I will come back to that later on. In total, volume terms, we reached about 3.79 billion tons in 2012 for all European ports. That's a decline of 2% compared to 2011. And 2008 was the peak until now. Then we reached close to 4.2 billion tons for all ports together, all cargo volumes group. There was also an interesting graph published by Alpha Line not so long ago, talking about the relationship between container throughput and GDP growth, and they calculated what is called the GDP multiplier. So you actually compare growth in TEU volumes with GDP growth on a global scale. And one of their observations was that actually this GDP multiplier is decreasing. So it was about 3.5 in the 1990s, and it declined slowly to about 2.1 since 2010. This is very interesting, but it doesn't apply to Europe. We are in a completely different situation. Our GDP multiplier is going up. And this indicates basically that particularly when you look at container traffic, of course economic activity does matter, but there are also other drivers. There is not only the derived growth that comes from economic activity, there's also substitution still taking place. And one of those promising markets now is everything has to do with bulk, so other commodities being containerized. And there's also of course, the effect of trade imbalances between regions that can have an effect on the number of containers, and these also being handled in ports. And last but not least, there is induced growth, mainly due to transshipment activities in European ports. So if you take that all together, it makes the picture very complex and makes also the situation in Europe slightly different from many growth economies around the world. And now in 2012 and also in the first quarter of 2013, for the first time ever, we have a combination of growth in container volumes and a decline of the GDP in Europe. It never happened before. What about other volumes, cargo groups? Well, this again is a year-on-year growth in the different markets in volume terms. And as you can see, 2009 was basically a disaster for all cargo groups except for liquid bulk. They only lost about 5% during 2009. And then we see for most commodity groups strong recovery in 2010, but then it's sliding away again, sliding down again to negative figures in 2012 and also in the first quarter of 2013. So we're struggling. Particularly 2012 was not really a good year in terms of recovery. Now, a very interesting side effect of the economic crisis is that a lot of ports around Europe suddenly realized there's more than containers, and they started to cherish also other commodity groups. Like liquid bulk and general cargo and so on has received a lot of attention in many ports around Europe these days. Despite this renewed interest in other commodities, containers are still taking an ever larger share in the total European port traffic. So you see that in 2012, about 26.4% of all cargo that was handled in European ports was containerized, and this compares to about 20% in 2005. The only other commodity that has been able to remain quite stable is road traffic, for London road traffic. It's about 10.2, 10.3% of total European traffic. So are we back at the pre-crisis traffic levels? Well, in order to do this, I developed these index evolutions. I took 2008 volumes as index 100, and you can see that before 2008 there was growth towards 2008, then a steep decline in 2009, and you see that only the container market has been able to rise above the 2008 levels. About 5% more in 2012 compared to 2008. All the other commodity groups are still way below, particularly dry bulk and conventional general cargo are consistently 15 to 20% lower than the volume we had in 2008. And dry bulk, well, it's a strange story, as I already told you. Dry bulk was not affected that much, liquid bulk, was not affected that much by the crisis, so a moderate decline in volumes, but it's sliding down further and further, and is also already at minus 17% or so compared to the minus 30% compared to 2008 levels. So this is worrying, and we're still trying to increase volumes. I zoom in a little bit on containers because it's a growth market, but it also shows a little bit what the problem is right now in Europe. This is evolution of the total European container volumes for the 79 ports I considered. And as you can see, well, volumes are going up after the disaster year 2009. But the dotted line is the most interesting one. That's actually the line that shows what we thought we would be handling some years ago. And so we're actually facing a container traffic gap, a throughput gap of about 20 million TEUs. That's about 2 times the volume of Rotterdam, in my view. And this is creating a lot of nervous reaction on the market, and also in terms of capacity, this creates quite some headaches to terminal operators and ports in general. I guess that some of you might be interested in the north-south balance. Well, no breaking news here. It's quite stable. I mean, since, in fact, the new millennium, the market share of the Hamburg-Le Havre port range is between 45 and 50% in Europe, and the Mediterranean ports are going up and down a bit, around 30%. Interesting is the green line, that's the Baltic. The Baltic is on the rise, and UK, on the other hand, is still losing some market share. Well, share, it's not really market share, it's regional share of its ports. If we zoom in a little bit further, then you cannot get around this one. I'll show you. But I updated it. So if you look at specific regions in Europe, and I compare 2008 to 2012, then you see that actually the 2 biggest container port regions in Europe, that's the Rhine-Scale Delta and the North German ports, they have slightly lost a little bit of their share in total European volumes. And the biggest winners actually are the North Adriatic ports, and particularly the ports in Poland. And last year we went to Sopot in a conference, and we noticed indeed that particularly PortEconomics is positioning itself as a new gateway to particularly Central and Eastern Europe. So this is interesting. What's also interesting is to see that overall the big growers can be found all over Europe, and also the ones that lost the most volumes can also be found all over Europe. So it's not like the north is winning and the south is losing or vice versa. It's actually spread all over the place. So here you see percentage growth, EU, based between 2008-2012. You can see ports like Piraeus, like Gdansk, Shimesh, Cagliari, and so on, at the one extreme. And at the other extreme, you find ports like Livorno, Giattaro, and some others who have lost some of their position. In TU growth, same kind of picture. So you find at the one extreme, you find ports in Northern Europe, in Southern Europe, the Baltic, and at the other extreme, basically the same. And you see Hamburg losing volume, while Rotterdam is gaining volume. So it's very interesting to see that although if you look at the economic development in Europe, there are quite some significant differences among regions in Europe, you don't find it back at the level of the volumes. And that again underlines that there seems to be a very strange relationship these days between economic activity and particularly in this case container volumes. So what are the market conditions and how's competition evolving in the market, not only between port but also in the shipping market and so on? Well, first of all, and that's not a surprise, there's a lot of market volatility and uncertainty. And in itself, uncertainty is not new. There's always been uncertainty in the markets. But there is some kind of market sentiment that these days there's more uncertainty than ever before. And that the markets are more volatile than ever before. So it's also partly a psychological thing. That people are really feeling that there are things happening at a tremendous pace. But it's not always supported by facts. So we see non-linear developments, we see market volatility, we see trend breaks, and then people talking about wildcards, black swans, all kinds of things that are making people nervous and uncertain about the future. What is not being underlined enough, I think, is that a lot of the problems in shipping and ports is not caused by the economic activities as such, but is also caused by endogenous factors, by the behavior of market players. If you look at container shipping, if you look at dry bulk shipping, a lot of the problems in these markets is actually caused by the overcapacity created by the shipping lines themselves. And the same to some extent applies to terminals around Europe and around the world. And so you cannot always blame economic activity or economic situation. Part of the problems also caused by ourselves. There are some very interesting implications of this uncertainty. One of them is that there are quite a lot of huge projects around Europe in terms of storage capacity, tank storage, warehousing activities and so on. And this seems to contradict the economic situation. Well, the reason why we see so many activities is basically that in times when things are uncertain, people actually use ports as buffers in their systems, using ports as buffers in their supply chains. And I quote Marcus Christopher, a UK colleague of mine, who said that uncertainty is the model of inventory. So you create inventory if you're not sure what's going to happen. And this is very visible in many ports around Europe right now. Of course, traditional forecasting techniques are being scrutinized. Also, port planning and investment tools are being revised. And it's very hopeful to see that in many ports around Europe, indeed, there are more activities, more action being taken in order to create more flexibility in terms of port planning, also to make ports more resilient and agile to deal with this highly volatile and uncertain market environment. There are quite interesting developments in that area, and I think that is a good thing. What's going to happen in these markets in the short term? Well, in order to explain what's going on, I use a kind of conceptual model developed by the famous Michael Porter. It's called the 5 forces model on competition. And he basically says that the rivalry that's going on among firms in an industry is dependent on the power of the buyers, the power of the suppliers, the existence of substitutes to the services or products that are being developed within that business, and the threat of potential entrants. And I'm not going to discuss all of these elements, but I want to pinpoint to some issues because I think they're also relevant to policy, to European policy. When you look at the markets, whether it's the shipping market, the logistics market, the port market, they all are facing the same problem. You cannot influence trade volumes, so you're stuck with trade volumes, and the only thing you can do is try to get a bigger piece of that cake. So there's intense competition, there's a pressure on margins, and at the same time, many people active in the business are required to offer a better service, but offer at a lower price. It's a little bit kind of contradictory development, but it's happening all over the place. In order to get out of this vicious cycle, many market players, shipping lines, logistics service providers, and so on, they try to differentiate their business, try to do something else than competitors, and they also try to integrate activities, although today it becomes increasingly difficult due to capital requirements. And last but not least, they're also spreading the risks. If you look at the latest terminal developments in Europe, you will notice that the owners or the investors in the terminals are often composed of very big consortia of companies, shipping lines, together with terminal operators, with financial holdings and like that. So the complexity in that field is increasing. Second one, buyers. We are in a buyer's market, and it's a kind of cascading effect. The shippers put pressure on the logistics service providers put pressure on shipping lines put pressure on terminals and ports. That is what's happening right now, a buyer's market. Interestingly, not all those players are having such a bad return on investment. If you look particularly at shipping lines, they are probably in the worst situation right now, particularly container shipping lines. They are making frantic efforts in order to increase rates by having general rate increases, which is not always successful. And what's also very interesting and important, of course, is that they are somewhat forced to divest in other activities and shipping activities, mostly terminal operations and inland transport operations. We've seen big deals recently with MSC selling off part of its terminal division with CGM doing the same, and also Hanjin is now on the verge of selling some of its terminals around the world. So there's a lot of things happening in that area right now in order to create more liquidity within those firms. And last but not least, potential entrants. It's very simple. In times of abundance, we don't mind that others are sharing the benefits. When, of course, times are not so good, if you're facing hard times, then you're trying to keep newcomers out of the market. And this is exactly the game that's being played in the container shipping market right now. The big ones are ordering new ships, maybe not so much because they need them, but maybe because for them it's a way to keep other shipping lines out of their business. And so to create some kind of oligopoly, or at least a more preferential market environment for the giants of this world. What also worries me a little bit is that there are signs here and there in Europe, but also the rest of the world, that some governments are eager to implement shelter policies. And that would, of course, not be a good thing for the business, because then we are losing the momentum a little bit and end up in protectionistic markets. That's surely not what we need for the markets. Also, in the port business, new entrants. It's a very mixed story here. Of course, there are new ports emerging. Look at Gdansk, the success story of Gdansk, or the revival of Piraeus, a spectacular revival. But there are also other cases where either the entry was not successful in the container business, like Amsterdam, where there are big doubts on whether or not entry can be arranged, like in Flushing, in the Netherlands. And also, even if ports enter the market, sometimes there are doubts about whether or not these ports will become successful. You probably know about the Adelaide port and about the gloomy traffic forecast also for this year. And so it's a mixed picture. So there are new entrants in the market, but it's not always easy to indeed get established in a market that is not really as strong as before. Ladies and gentlemen, allow me to come to some conclusions. First of all, EU port traffic volumes are still below 2008 levels, except for containers. Although we must say there are huge differences between individual ports, and that these differences are not always related to the economic activity in the immediate hinterland of these ports. So that's important. Secondly, ports are facing a multi-layered buyer's market situation. The buyers are pushing ports in certain directions, and the bargaining power of the buyers is big at this moment. And I see no reason and no sign that we will move to a seller's market soon. Not in the short term, not in the medium term. Because of the fact that economic prospects are still somewhat weak, and also that there is enough capacity in the terminal business, in the shipping business, to keep the buyers strong. In that sense, it's very important to underline that ports that do not respond adequately to the buyer's market imperatives will lose ground. Very simple. In a buyer's market situation, if you are not performing well, you're out. If you cannot respond to the requirements of the buyers, you're out. In that sense, and that is a clear relation also to the communication period between policy makers, I think it's very important to underline that you need to make sure that port authorities have the autonomy and can also create their adaptive capacities in order to develop strategies to counter uncertainty in the market, volatility in the market, and also to respond to the requirements of the buyers. I'm not too worried, I don't worry too much that the buyers don't have the power to act right now. So in that sense, I think the focus should be really on creating and facilitating port authorities to develop those skills and capabilities. I thank you very much for your attention. I'm ready to respond to any questions.